Hey, good afternoon, everybody. Welcome to Swing Trading. I'm Connie Hill. Happy that you would join me here today. I'm sitting in for Mike Fairborn for a couple of weeks while he's off gallivanting, doing some fun stuff that, of course, he deserves a break. I'm glad that you joined me here today. You know, when I first started trading, it was swing trading that I really got hooked on, that I really enjoyed, that really kind of put my foot in the door to start trading. So I think we're going to have some fun here over the next couple of weeks. Now, I'm joined in the chat by Rachel Dashel, and I'm so glad Rachel's here. You know, we have now another CMT official on our team. She's a CMT and a CFP, super qualified, been doing the markets for several years. So as you have questions, go ahead, chat those in. I'll watch the chat for those questions, but Rachel will be my backup. If there's some things that I can't quite get to or that are easier for her to get to, I'll let her do that. Now, I do hope you're following us on X. It's a great way to connect with us when we're not in the class. I'm Connie Hill, CS. Rachel is Rachel Dashel, CS. She might want to type hers in because her last name's a little trickier than Hill. And but we'll post educational content out there, things that we're seeing in the markets that we think you might be interested in. Now, I have a question for you. How many of you like to be fashionably late to the party? For example, getting together with friends or family, barbecue, whatever it is, and you're like, I don't want to be there right at the beginning. I want to get there maybe 20 to 30 minutes late. Okay, if I've just described we don't want to do that when we're swing trading. Okay, with swing trading, we want to be on time to the party. That's going to be our focus here today. I'll give you more details what that means. Let's go through our disclosures and start with our agenda here today. What we talk about is intended for education and informational purposes only. Don't consider it a recommendation. Options carry a high level of risk and are not suitable for all investors. Short options can be assigned at any time up to expiration, regardless of the in-the-money amount. We'll be using the Paper Money software application. It's like market data, market information, but not your own money on the line. It's a great place to practice strategies as well as getting to know the platform. One thing that's different in Paper Money is it will not assign early. The real market will and has and does assign early, but Paper Money won't. So I don't want you to not do that. All right. Past performance is no guarantee of future results. And we'll might talk about possibly some futures symbols, but we're never trading futures necessarily in this class. All right, now I'm happy to see Greg says, if it's a barbecue, man, you are going to be early. So is Kelly and Ralph. That's great. Kevin says, yes, but not if there is food. Oh, if there's food, Kevin's going to change his mind. Okay, could be the same way with some swing trading. Want to bring your attention to some upcoming workshops. We've been seeing so many of you out this last year. It's been so fun. We've got Anaheim coming up in November, a little bit before Thanksgiving, so you can go have fun in the sun and then come back for Thanksgiving. Then Houston, December 11th and 12th for a options and technical analysis workshop. And then Miami will be our last advanced options for the year. Okay, so keep those in mind. If you can get yourself there easily, you'll notice that we really go to concentrated centers where we have a lot of clients. So if you live in Utah, like me, or maybe Idaho, we're probably not going to hit you very close. Okay, so go to somewhere where it's easy for you to get to. All right, today for our agenda, we're going to just take a quick look at the market, talk to you a little bit about swing trading concepts. But we're mainly going to be looking at a lot of different examples, and we're going to be talking about getting to the party on time. Kelly says you're in Orlando on Friday and Saturday. Perfect. We will love to see you there. Let's go ahead and jump over to our Thinkorswim here. Got the SPX up. And on my chart, just a 6-month chart, and the blue line is a 10-day exponential moving average. It gives us a good gauge what's going on in the short term in the market. The red is a 30-period moving average, okay? A little bit more intermediate. You could use a 30, 40, or 50. And so we can see, yeah, the market definitely has been in a really strong uptrend. Just because we're pulling back here today doesn't necessarily mean, oh, the market's bearish or the market's changed. However, we are going to be looking at some bearish opportunities because we haven't had a chance, at least in my classes, to do many bearish ones. And there's a lot of things that are showing weakness, even though the overall market is bullish. And it's an opportunity for you to maybe refresh those skills or learn those skills as you do some of the practice trades in your paper money account here today. So let's get started. Well, I'll show you. The NDX is looking very similar. It put in a new high today as well, even though we've got kind of a red candle, meaning they're selling off activity after the new high, but that's also happened yesterday and Friday. And it just keeps happening over and over, putting in these new highs and then maybe fading it a little bit. Let's go ahead and take a look at a couple things. One thing that I did today that I haven't done for a long time is to run a scan called my Early Morning Movers Bearish Scan. And on that bearish scan, we're looking for stocks that are already downtrending at least 3 months and the last month, and that are also making bearish moves today. And some of the ones that we're going to look at are making those bearish moves today where, man, we've got to be to the party on time. All right, so here's one, Whirlpool. You can see, last 6 months chart, the last 3 months been downward trending. Last month or so has been downward trending. It's been below this 10-period exponential moving average. And what's it doing right now? It's bouncing off of it. It hadn't actually dropped quite that much when I was looking at it earlier, but it sure is a strong bearish candle. Now, the question comes into, well, where do we think maybe it might drop to? Got a support line here about 74. So stocks at 77. This is 74.86. So maybe about a $3 and some change drop possible. But it's nice to know, well, where did it have support in the past? Where might we find that? On Whirlpool, we're going to have to go back a long time. We're going to have to go back to a 10-year chart. And some of you are going to think, well, it doesn't matter. You know, what happened 10 years ago? Is it really relevant right now? And sometimes it can be. Doesn't mean it will be, but it can be. And we have to go back to COVID days, March of 2020, to see when this stock was hurting that bad. These candles are monthlies, okay? And so the low price here is about 64. Now, from 77 to 64 is quite a big drop, and that might be a little optimistic, but keep that in mind because that is a monthly chart that we're looking at there. It might even maybe use this green candle here, maybe the bottom of this green candle, which is, looks like that low there was 111.74. No, that's saying what it is. That doesn't seem right to me here. I think I'm off. Okay, I think that is off because if I look at my chart here, it actually, the bottom of this candle will be a little bit above where we are right now. So we're going to stick with that 64. All right, let's talk about what makes this candle or the day to day, what makes it be on time to the party? What signal is it? Well, really, it's a significant bounce off this 10-day moving average or what we might consider resistance. Okay, today's the first day it's doing it. It's down about 2+%, not quite 3%. Okay, and so it's significant as opposed to being a really dinky small candle. This is a candle that is large, and a large candle means lots of momentum moving that way. So that's what makes it being on time to the party. So let's go see what our possibilities are as far as trades. Now, in this class, we typically don't short stock, okay? In fact, in probably most of our classes, we don't short stock because of that unlimited risk potential. So for that reason, we're going to have to turn to option strategies. I don't know how often Mike does options in this class. He might not have done a lot because of the bullish nature of what we've been seeing. That's kind of the default. So he might not have been out in the options too much, but I hope all of you or most of you are familiar with them, or at least starting to get comfortable with them. Now, we're going to use the November options on this one. You know, how long might it take the stock to drop? Well, it could take it a week. You know, it could take it a week, maybe 2 weeks if it needed to. But you can see once something starts dropping, how quickly it can drop, and it can really cover a fair distance before maybe finding a support area or a target area. Okay. So we want to make sure we're buying enough time. So usually we'll buy at least a month's worth of time, plus how much time we think it might need to hit the target if we're just going to buy a long put on it. There are other strategies you could use. You could do spreads in here, especially with expensive stocks. You might consider doing that. In this one, it's a $77 stock. And so we're just going to do a long put, but we're going to make sure we buy some intrinsic value. Okay, so looking here, stocks is 77. We've got a strike price here, 77.50. That's going to be our at the money strike price, and some traders might feel comfortable with that. We're going to use the 80 strike price. Why am we going to use 80? We're going to use 80 because this column here is my probability of expiring in the money. And we need these options to expire in the money to be profitable with them. So I want to start at a decent percentage. We're going to start at 60%, which theoretically, something that's 60% probability is higher probability because the opposite of that is 40%. Okay, so we're going to try to target at least 60%. Let's see. Mary Biden said, can you do hybrid with short plus option to limit risk? You can do whatever you want, right? If you wanted to do a spread on it and contain the risk, absolutely you could. Okay, you could make that a long put vertical. If you wanted to do a credit spread, you could do a short call vertical. Okay, so absolutely. It's just that that's what we're going to use on this particular example. Okay, and not wanting to get into a lot of theory with some of the different option strategies that do require quite a bit of know-how in constructing them. So let's go ahead. We're going to go with this 80, and there's enough open interest here. If we're just doing 2-3 contracts, we'll be just fine. Looks like the spread here, it's a little high, but it's not out of range. Okay, it's 50 cents here. And if we were to take 50 cents, and let me grab my little calculator here, because this one's actually a little bit easier for me to use. If we grab the current ask price of 720 and divide it by the spread here of that just changed. It was 50 cents. Okay, it's still 50 cents. All right. We'll take 50 cents and divide that by 720 to see what percent are we paying in the spread. So it looks like about 6.9%, which, if you can get 4%, 3%, 5%, it's really happy, right? When you can get it in that range. This is kind of falling in the range where maybe it's a little high, but many people probably wouldn't say, it's no good. Some people will draw the line when you're paying 10% on the spread. At that point, they might go, there's maybe not enough open interest. There maybe is not a lot of trading activity to make it worthwhile. And so it has a big spread on it. But I'm going to say this is a good to go because it's less than that 10%. All right, let's go ahead. Let's queue this up. And on this particular one, what I'll do a lot of times in some of my classes is I'll let us risk $1,500 per trade. So we don't want to risk more than that. And so many times they'll say, well, what's our maximum theoretical loss? Well, truly, the option price could go to 0. So let's position size for that. We don't want it to go to 0, and we're going to take steps to make sure it doesn't go to 0. But we are going to put in just 2 contracts here so that we stay below the 1,500. All right, that would be at 1440. All right, those 2 contracts. Now let's talk about targets and stops. One of the things you're going to find with swing trades is you're kind of like trying to trade part of the move. And we're trying to get in there just as soon as we have enough evidence to feel comfortable that it's moving a certain direction. And then we want to get out either 1 at a target or 2 by a stop. And our stop, many times people will change it every day. We'll start at a particular point, and then maybe the next day see where it closed. Okay, let's adjust our stop loss. Maybe we get it to a break-even point pretty soon, and we keep just kind of ratcheting it down. So going back to the chart here, I would say, I'm going to zoom in here a little bit closer here. The high today is 79.58. And so, quite honestly, if this stock reversed and went above its high, I would be thinking, oh, it didn't bounce down off resistance. This thing is reversing on it. You could use today's high. Some people might prefer yesterday's high if you want a little bit more cushion if it's not such a big candle. But because it's such a large candle, let's use today's high of 79.58. I'm just going to kind of type that in there. 79.58, and let's just go 20 cents higher. Okay, so we'll go plus 20 cents, and if it goes 20 cents higher, that's where we want our stop. Now, we could, if we wanted, as far as a target goes, we could go for this target here that's not a super long drop. And maybe if you were doing one contract, maybe you go for target 1, and then on the second target or second contract, you go for target 2. You could align it that way. Because this isn't that great of a move, what we're going to do is we're going to use the target that's a little bit further down. Okay, so we're going to go back to our 10-year chart, and we're going to say, okay, 64 is really, that'd be a $12 drop. That might be a little bit kind of pie in the sky. So maybe we don't go all the way down to 64. What if we cut it a little short? What if we go maybe to 66? Okay, so we're going to put 66 as our target. And if we hit it, man, we're happy to get out because we're just trying to trade the meat of that move. We're not trying to pick it off at the top. We're not trying to absolutely call the bottom on it. I mean, if that happens, great, but we're trying to just get a chunk of it and be happy with our chunk. Okay, so let's put this on this way. We're going to do a first triggers OCM. We're going to create 2 opposite orders here. And the first one, let's put it based on the target that we're interested in, that $66. Well, what we're going to do is we're going to make it a conditional entry. So we're going to change our order type to a market, and then we're going to put in the conditions. And then both of these orders, we're going to make GTC, click on the gear, and this is where we're going to put in the price of the stock in this one. So we're going to say, all right, if Whirlpool stock gets less than or equal to 66, and let me make sure that the arrow is the right way, it's less than or equal to 66, get us out of the trade. Okay, that's going to be our first condition. The second one, we're going to base it on the price of the stock as well. We could base it on the price of options if you wanted to. In this example, we're not going to do that. So we'll go ahead and put in the stock price here. And so we'll say, okay, if Whirlpool goes up, which we don't want it to do, but if it goes up 20 cents higher, that would be 79.78. And that would be 20 cents higher than today's high, then we want to be out. And then each day we'll take a look at it. Oh, did it drop down a little bit more? Great. What was the high of that day? Okay, let's go 20 cents higher than that day. And we would come in and adjust this every single day. With swing trading, you can't afford to be super lazy or even moderately lazy. You kind of have to be sharp. It's like if you're going on vacation, maybe the best idea is not to put on a bunch of swing trades, right? Because it makes it a little bit difficult to keep track of it. If you are going to do that, man, for sure put in targets and stops that you're comfortable with if you're going to go heading out on a boat for a couple of days. All right, let's go ahead. We're going to do confirm and send this one on its way. Carol, I do not have XLV or Oracle as choices that we're going to be looking at here today. I've already pre-picked the ones that I want to use because they have signals that we want to be on time to the party for. Okay, so I'm not going to be able to honor that. Now, it looks like we've got a survey in the chat. Many of you know from time to time we'll do a survey with you. We want your feedback. We want to know what's on your mind for this particular session. So there's just 2 questions, just radio button, plop, plop on a scale of 1 to 10. Super easy. I can be a fan of super easy surveys. Now, we also have a couple of questions there that you could answer if you wanted to. We love that input as well. I also encourage people to use that as some room to communicate something to your instructor. I will be here for the next couple of weeks with my account. And so if there's something you're like, hey, I'm having a problem with this, could we maybe cover that next time? Let me know by answering that question as well. Okay. Rachel will post that again before our session's over, and I will remind you at the tail end to do that. Kelly says, that's your routine. I think you're saying, Kelly, every single day you go and look at it, make an adjustment as needed. Perfect. That's how you stay on top of these kind of trades. Okay, let's take a look at something else. We're going to go back to our charts. And one thing I noticed, not that we totally want to pick on this, but a lot of the examples that were coming up that I was looking at were consumer discretionary stocks, meaning those things that we're not tied to, right? They're not staples, they're not food or medicine for the baby or toilet paper or whatever, right? They're kind of like, if we want to spend money on it, then, it's discretionary. It's not a necessary. So Kava Group, we don't have this restaurant around me. Maybe you have some by you, but apparently it's very popular, but it looks like we're not eating out enough right now. So again, it's got an established downtrend. It's been downward trending mostly over the last 6 months, and we can see maybe the last couple of months here, really a lot of that time falling below that 10-period moving average. It was bouncing off of it. Now, it's dropped so far that the 30 and 10 are pretty close together. But what would we be seeing here to make it be on time to the party? Meaning we didn't get the signal yesterday or Friday or Thursday. We are getting the signal today, and we want to show it up to the party on time. We want to participate with the cake, all right? We don't want to miss the cake. So some of you might look at this and say, okay, see that bounce off either of those moving averages. The other thing some of you might use is it's trading below the low of the high candle day. So in this little run up, yesterday's candle is the high candle. The low there is 62.35. And earlier today, it closed a little bit lower or traded a little bit lower than that. Right now, if market were to close, it would be a few cents off of that. But we're going to do it based on a trade below the low of the high day. That's going to be our signal that says, all right, we're being on time to the party using this. Now, you can see down below here, I've got a line here at 55. We have to go out a little ways on this one, maybe not so far. We're just going to go out to a 2-year chart and see where did that come from. Okay, this line I drew in a long time ago. And in this perspective, it doesn't look like it's that big of a move. But quite honestly, a price of $62.39 down to 55, we're looking at over a $7 drop on a $60 price tag on the stock. And so, you know what? That's a significant move. Okay, so 55 is going to be our target on this one. And so I'm just going to type 55 in there. Now, let's decide about a stop loss, okay? Because again, we're going to be calling it pretty tight. We're going to be using daily charts. I just wanted to show you with a weekly where that 55 came from, that maybe it was about resistance for 3 weeks, came up, powered through it. Okay, so that old resistance should become new support, or in this case, a target. All right, so you can see from here down to that 55, yeah, that's a sizable drop. Now for our stop loss, would you consider today's candle a big candle or just kind of a medium candle? Okay, you can answer to your screen or your dog, whatever. I would call this kind of a medium candle. I wouldn't think it's as robust as the candle we saw in Whirlpool. Whirlpool was a little bit longer body, a little bit stronger day. So on this, we maybe could look at a couple things for the stop loss. One, we could make it go a little bit above today's high, or we could make it be a little bit above yesterday's high. If this candle were longer and deeper, I might be convinced to go with a little bit above today's high. I want to give it a little bit more room though, okay? So let's see what yesterday's high was. That was 64.99. So 64.99 plus 20 cents, we're going to put that in at 65.19. We're just going to go 20 cents above. Now, 20 is not a magic number. You might want to do a percentage, or you might feel comfortable with 50 cents. Or if you're into more expensive stocks, sometimes it's going to be $1 or $2. Okay, because a dollar move on a stock that's $1,100 stock, man, that does not amount to much percentage-wise. Okay, yeah. So some of you are saying, yeah, you'd kind of look at that as a kind of a medium-sized candle. Chris, bingo, it's just bouncing down off that 10-day moving average and 30-day moving average as far as saying what makes us on time to the party, and that's it. Okay, so let's do it a little different on this one. Okay, we're not going to use the high today. We're going to use 20 cents above yesterday's high. And then again, we're going to come back. I mean, if by the end of the day, this stock is down here a little bit further, then we might go, okay, fine, we'll do 20 cents above today's high. Maybe that might wait till tomorrow. Okay, we're going to have to use our discretion a little bit here. So let's see what maybe our possibilities. Now, this one trades a little bit more, so it does have some weeklies, and sometimes you can find strike prices to your liking. But again, I think we need to give it a couple of weeks to drop. And so these November options are just kind of primo for that, because we've got a couple of weeks for it to make the move plus an extra month's worth of time. That extra month's worth of time helps us so that time decay is not as big of an issue. Because when you buy options, that's kind of like your number one threat to the option is that it's going to weaken and melt and lose value every single day. So to try to minimize that, one thing we could do is look a little further in the money as opposed to saying at the money. Now the stock is 62 right now. So technically 60 would be the at the money strike price. And right now it's a little bit out of the money. And again, I want to follow my column here, probability of expiring in the money. And I'm going to look again for 60% plus so that we have some additional intrinsic value in there. It might not be more than the time value, but just that probability of 60 plus gives you a little bit more comfort. So we're going to go for the 65 here. Love the open interest. Look at that, over 3,300 contracts. You could do 10 or 20 contracts, or whatever your account allows, and not feel intimidated that there's not enough open interest, because there's plenty of open interest for most traders. 15-cent bid-ask spread. Oh, this thing is just juicy. Okay. 720. I think that was pretty close to the price of the last one that we just got into, was about 720, because we did 2 contracts, because our max theoretical loss, if we went to 0, which we don't plan for it to, and we're going to guard against that. But theoretically, right, we know it could be our max loss it could go to 0. Can't lose anything more than we put into the trade. So we're going to do the 2 contracts here, and we're going to set up a similar thing. We're going to do a first triggers OCO and put in the conditions based on the price of the stock, when to hit our target and when to hit our stop. Kind of answered some of those questions already. So let's create 2 opposite orders here. And you can just right mouse click anywhere on the line. And on this first one, we're going to do the same thing. We're looking for it to hit our target down at 55. Okay. So both of these are going to be market orders. Both of them are going to be good till canceled. And then we'll go in and put in the value of the stock for that condition. So first one, we want it to drop to 55. Kind of scoochy this up. We're going to be looking less than or equal to for our target here of $55. And if you didn't want to go all the way to 55, say you wanted to go to 56, 55.50, and have a little bit more conservative a target, you could certainly do that. Okay, there's nothing magic that says you have to go down to exactly where that support is, but that's where we're just going to start it out as our initial target. And make sure this is the right way. Yep, we want it less than or equal to $55. And now we'll put the condition for the stop. When do we want to get out? When are we going to say, oops, it's not following through, man. We thought this baby was dropping, and the baby is not dropping. In fact, the baby is going up, unfortunately. And so we're going to do, what was that? 64.99 was the high of yesterday. So we're going to do 65.19 is where our stop is going to be based on. All right. Again, we're going to look at this every single day. We're coming out to check on it. Let's go ahead. Let's send this little guy off. Now, let's see. Stay-Gold says, I missed the beginning, so are you bearish on the market? It's not so much that we're really bearish on the market. It's that we've got some weak stocks that are trending lower, and we haven't had many opportunities to kind of put on our bearish hat. And it's really important to be able to have that skill set when you need it. So we're doing some practicing on stocks that are downward trending over the last 3 months, over the last 1 month, that are having a signal today that says get in right now, not get in yesterday, not get in on Friday, but get in right now. Okay, so we're kind of practicing that. Greg says, do I look for a ratio for profit and loss like a 2 to 1? That's an additional element we could put in, and maybe we would do that in a different class. All of these actually are more than 2 to 1 reward risk ratios because we're keeping that stop pretty tight. Okay, but definitely something to add into an extra step, maybe an extra rule that some of you might want to follow. Okay, now in preparation for this class, I wanted to go back and see what has Mike been teaching you guys. Okay, he has been covering some really cool stuff. So I really hope that you guys have become subscribers to our Trader Talks channel. Let's try this again. Doesn't coming up. Let's try it there. There we go. Come over here to our Trader Talks channel. And it makes it really easy to find our content. So I put it on the playlist and I came down here, second row, second one over to Mike's swing trading. And if you haven't caught some of these videos, you might need to be like me and go, I need to do some catch up because he has got some really cool things out here using technical analysis. And I would say swing trades are definitely very technically oriented as we're trying to capture the move as soon as it happens and get out at a target, or when we've got a good chunk of it that we're like happy campers. We're like, oh, 200% return. I can be happy with that, or whatever that number is. I just made 200% up. But he's got a lot of really cool classes that he's been doing in the past. So those of you that have been attending Mike's class, good for you as he explores different ways we might consider looking for targets or looking for emergence of the stock starting to move using an indicator. Okay, so when you're when you're subscribed, it makes it really easy for you to find that. The other thing that makes it easy for you to find are some other things that we've developed. And I'm just going to come over here to home, and I'm going to come over here to bite-sized content. We're creating some short videos, they're 10 minutes or less, on just a smaller topic. It's not a full-blown class, okay? So I did one last week, and it was on how do you build grid charts, and grid charts are multiple charts that you can see in one view. You can do 4, 6, or 36. You can do up to 36. That's a lot of data, I think. But I teach you how you can do that just really quickly, and maybe some ideas of what might be helpful to create grid charts for. Okay, so take advantage of that bite-sized content. While we're on the tab here and just taking a little break, I want to show you where you can sign up for a couple of things. Go into Learn, come over here into Schwab Coaching, and this is after you've logged in. You won't see this menu if you haven't logged into your account yet. So log into your account. And then if you are interested in attending one of our in-person events, like I advertised at the beginning, come over here to in-person events. And they're starting to fill up really quickly because we're letting people know about them. And so if you have any interest at all, come over here and sign up. You can always cancel it later. Okay. And then we have something going on that I want to make you aware of in our upcoming workshops, virtual workshops. We don't do a lot of these virtual workshops because we do quite a few of them. Let me check the box. I just clicked on it, but I think I need to check the box and uncheck webcast. There we go. Look at this. Okay, in a couple weeks, we're going to start this on the 20th, Advanced Option Strategies. I think we did 5 live events this year. Maybe it was 4, but I think it was 5 live events of the Advanced Options Workshop, which, maybe it wasn't placed really convenient to where you are and you couldn't go. And so here is going to be an online one that we're going to be doing starting in a couple of weeks. So those are ready to kind of get into, going beyond some of the basic strategies. You want some multi-leg strategy know-how. This is where you can attend. You don't even have to travel anywhere. Of course, we're not going to provide you breakfast, but it still is quite a bit convenient. Okay, so I wanted to point that out to you. All right, let's head back over to Thinkorswim. And I think we've been filled on both our orders. Let's just take a quick look. Kava, Whirlpool, yep, we have been filled. Okay, I think we could sneak one more example in here for just a moment. Let's take a look at this one. This one's kind of interesting. Well, I think they're all interesting. I wouldn't say one is not interesting. I wouldn't present you something that I didn't think was interesting or had potential. CarMax. CarMax is struggling. I guess we're not buying their autos enough or whatever, right? So they already had their earnings a couple weeks ago. Major disaster. It tried to rally. It tried. We have a few green candles there, but it didn't really get up all that high, past its high on the day that it dropped. Okay. What's it doing right now? Finally getting a real significant candle that says, I am breaking down, I am bouncing down off that resistance. And you can either consider it the 10-day or maybe just kind of horizontal right here, maybe about 47 or so is where we might see maybe that resistance area. So today is the first day bouncing down. That means it's time to go to the party. We don't want to be late to the party. We want to be there on time. So let's go see what some of our possibilities are. Hey, Ricebird, you said you're signed up. Perfect. Let me see. I think is there a question in here, a request? Let me see. P.L. Anderson, I'm going to say that is what is the difference between entering both target and exit on one conditional screen and the two screens I am using? Actually, we could do it in one, and maybe on this example, I'll show you how to do it. Sometimes if people aren't familiar with doing it in both spots, it can be a little bit confusing. And then once you're used to it, you're like, oh, I think that's easier. Okay, so it's what it'll do, what we're telling it to do is going to be exactly the same thing. Okay, we'll try it, putting it on one this next time. All right, CarMax, where could it drop to? Well, what did I say it could drop to? We're going to have to go back a ways, guys. CarMax has not been this weak for a long time. We're going to have to go back 20 years. And really, these areas of support and resistance, you're kind of like, really? We need to go back that far? And it's just the idea that that's the last point where people were buying in or selling off, creating those support and resistance zones. And so to really see it, we had to come out here. This was actually COVID. Okay, this was first week of March of 2020, where it went down this low to 37.48. Again, it's in a monthly chart. Okay, so it could have multiple touches down here during that week. Could have only touched it once, okay, but that's kind of the low area. And so it's kind of already busted through maybe where intermediate support might be. And so this is really, I'm going to say it's an aggressive target, right? That is $8 down on a stock that's $45. So that is like a significant move. So maybe we wouldn't be quite as aggressive to think that maybe it could go to 37.48. Okay. What if, and I'm just going to kind of clean up my numbers here. What if we said, let's do this. Let's change this to weekly. Give us a little bit more context here of the data. And I'm going to have to kind of zoom out here to see, how much it went down there. So here's the week it went down. And then this week didn't go quite as low. That week it went down as low as 43.14. So we could be 43.14. We could be a little bit less aggressive, but a drop from 45 to 43 is not that big. Okay. So, but if somebody wanted to maybe have that as the first target, they could. Otherwise, we're going to use this low of 37.59 and maybe go up maybe a little bit. Maybe let's ratchet it up a little bit. Let's go like, say, 38.59. Okay. We'll maybe shave $1 off that really long, low target. All right. How about a stop? Let's do the same thing. Let's kind of zoom in here really tight. Where the high of today is and where the high of yesterday is, there's pretty similar. It's right here at this kind of this 47 edge. So today's high was 47.18. And so say we went 20 cents higher than that, that would be putting it at what, 47.38, exactly where that white line is. Okay. And this is a decent sized candle. I wouldn't say it's a dinky candle. This one has a little bit bigger of a body. Momentum is strong. And so we would expect it to continue to drop. And if it didn't and it goes above our 47.38, we probably want to close down the trade. Now let's give it a teeny bit of leeway. Let's do here. Let's go 47.48. Let's go 10 cents higher. Not 20, but we're going to go 10 cents higher on that one because we're already given it a little leeway over today's high. All right, and therefore, and then our target we said is going to be 38.59. Okay, let's do it. What do we have available? Doesn't have weeklies, although it does some decent trading volume, but we're going to use these November options again, a couple of weeks for it to make the move, 30 days of buffer if it doesn't move super quick. Let's see, it's at 45, so we've got our at the money right here at the 45 strike. A little bit in the money is our 47.50 that has a 65% probability of expiring in the money. So we're going to take our cue from it. There's plenty of open interest here, 311 contracts, 10 cent spread. It's looking happy for us. Okay. In this one, could we do more than 2 contracts? And the other ones we couldn't. If we're willing to risk $1,500, we can do 3 contracts. 4 puts us just a little bit over, so we're not going to do that. Okay, now this one we'll use the conditional order for both our exit and our stop. So in this case, I'm just going to do a first trigger sequential, create one opposite order. This one, we're going to make it a market order. Good till canceled, and then we're going to go put in those 2 stock conditions. As we click on the gear, that's going to come up for it. So first one we've been doing is our target. So let's be consistent here. So if this stock gets down to 38.49, we'll be happy campers. We'll think we've got the meat of the move. We'll be happy and leave. Okay. Or, and I just want to make sure this is going the right way. Yeah, that's less than. Or the mark price is greater than or equal to, this is going to be our get out of here. It's not dropping anymore. And that's going to be 47.78. That's the right number, 47.78. So you could do it this way, and that's in answer to what Chris was asking about. It was the difference. They're really technically, you're setting up the exact same thing, showing you both ways to do it. If you're newer, this way is a little, I don't know, might require a little bit more thinking through because you're sticking them there together, but it's basically the same thing. Okay, we're going to go ahead and hit save. We're going to go ahead. We're going to send this baby through. And off it goes. Looks like we just got filled. Perfect. We're going to track these. I'm going to be looking at these guys every single day. And so for those of you maybe that didn't see exactly what we just did this long put on CarMax, a long put on Kava, and a long put on Whirlpool with the idea that we're just looking to trade the meat of the move, getting in as soon as it happens, being on time to the party. And then if we leave a little early with profit, we don't care. We can leave the party early. As long as we're satisfied, we're like, yeah, we got a nice return on that. We're happy campers. Yeah, go ahead, get out of the trade, because you guys have probably seen, and I have too, how quickly that kind of a thing can change on us. Right? All right. So number one, we have a survey out there. And again, we really appreciate it when you take the time to answer that survey for us. So I'm going to ask you, if you don't mind, fill out the survey. Be a subscriber on our Trader Talks channel so you can find our content. If this was helpful for you today, hit the thumbs up button on the way out. That helps others know that you found value in the session, that they might find value as well. Okay. Rachel, you guys kept Rachel a little bit busy here today. Thank you, Rachel, for your help answering questions. Now, one more class today is going to be the next one. It's going to be right at the top of the hour. It'll be after the close. Kevin Horner is going to lead that discussion, so you're not going to want to miss it. So go refresh your beverage, get a snack, come on back. We'll see you at the top of the hour. Thanks, everybody.